So we got this UAW strike. We're on the verge of it. And tell me what's going on with that.
Yeah, so actually by the time this is released, they may already be in a strike mode because the deadline is midnight on, or 11:59 technically, on Thursday night, and looking very much like they're going to go out. Their new president of the UAW, Shawn Fain, who is really impressive, and I love this man, and quite militant, and representative of the rank and file's desires to get at least some of what they lost back in the financial crisis back, and some pay gains and all of those sorts of things. He revealed their strike strategy, and the idea is they're going to target all of the big three, which is unusual and unique in terms of their historic approach to going out on strike. And rather than everyone going out all at once, they're going to target specific plants, specific locals to go out. And then as negotiations proceed or negotiations fail, they're going to ratchet up the pressure and ratchet up the pressure and ratchet up the pressure. So that has two impacts. Number one, it keeps them from draining their strike fund super quickly, which they actually have a very large strike fund, so they could sustain this for quite a while and keep their workers paid and fed, et cetera. And also, it also keeps the bosses and the executives guessing of what's going to happen next and allows them to continue to exert maximum pressure. So I think it's a very intelligent approach. However,
let me jump in for a second. Before we get to the video, I just wanted to point out the UAW has 150,000 members.
Yes.
This would be a gigantic strike.
Huge.
Huge.
And the auto industry is so iconic.
Right.
I mean, it's hard to think of an American industrial brand that is more iconic and more central to our mythology about the American middle class and the reality of building out the American middle class than like Detroit and the big three. So anything they do here is going to punch way above their weight. The audacity, the boldness of the demands that they're making is also really amazing and exciting because they're asking not only they want a 40% pay raise.
So can I interject here? Because I want to give everybody a fun fact on this. First of all, they want the 4-day work week, which I'm sure you were about to point out. Second of all, you brought up the 40% pay raise. I was watching a CNBC interview the other day, and they were talking to some random corporate interviewer, and the guy's like, all right, like I see your demands here, so you want a 40% pay raise for the workers. And of course, Shawn Fain wants that because the executives got a 40% pay raise. So he's like, I didn't pull this number out of nowhere. I want this for a reason.
Right.
So he brings that up, and he's like, the host is like, okay, but would you accept, is there wiggle room there? Would you accept maybe like 30%? And Shawn Fain goes, no. And I was like, all right, let's go.
Listen, I am loving Shawn Fain. There's something about his there's this sort of like aw shucks nature to him and this very almost like monotone voice, but then he's delivering this just absolutely blazing class.
He's no nonsense. He's no nonsense.
Yeah,
he also said,
I enjoy him.
He also said, oh, people are trying to say we're going to wreck the economy. No, we're not going to wreck the economy. We're going to wreck their economy, the billionaire economy.
Yes.
I was like, oh,
love that. Love that. So anyway, while we love it, Jim Cramer over on CNBC, he's been having at this point like a multi-month meltdown over Shawn Fain's rhetoric and who he is and the possibility of them going out on strike. So he had his latest reaction. He offered an unbelievable suggestion for what the car companies should actually do in response. Let's take a listen.
I'm going to posit something. The man you saw just now, I think, is a paper tiger. He's coming in and saying, well, they've never seen anything like it. I think there's a nuclear option on the table if he's not careful. And that nuclear option is a country called Mexico. You don't hear about it much. But if you say we're intransigent and we're going to stay at 40%, there's no give, well, you know what? Monterrey, Puebla, Querétaro.
There's the capacity to have that happen, not overnight.
Mercedes did it in 2 years.
2 years would be a long time, too.
Why? They don't have that much demand. You put that out there and you say, listen, you want to know where the new ones are going to be made? We're going to continue to make the old ones. But Puebla's got a 55,000 person factory for VW. And they got a good educational workforce. It's $5 an hour. No real pollution control rules. That's not to be mentioned. Have free health care. So you know what? You want to play ball? You want to keep doing this? Mexico.
Glad to see you're standing up for the American worker here, Jim. Thanks for that.
Well, no, I was a union member twice. One was completely corrupt when I led a wildcat strike and was fired.
Oh, okay.
That was not good.
But in this case, you seem to believe that the automakers have...
Well, I just think that this man, and I like, the union, you could say that they're way behind, the wages aren't the same
his point would be that they have barely kept up. They haven't kept up with even the pace of inflation since 2007.
So you go to 25. Are they not? Is he not satisfied with 25% increase? I think most of America says Ford's the most unionized company in America. It is.
What about the way that they say they're going to strike, which would be not across the board, but
Stellantis is the one that you want to go up. Oh, you mean targeted factories?
Yes, targeted factories.
So you target the F-150 because it makes a lot of money, the F-150 hybrid. You know, they can build a hybrid very easily in Monterey.
B of A took a crack at that, what they're calling a standing strike, where you go after individual facilities. Right. Their argument is it'd be very difficult and inefficient for any of the operators to coexist with that. So they see likely, if it goes that way, makes sense to shut down, lay off the workers, and restart if and when you get a deal.
Well, look, I think this man... I would not say that Sean Fain is a paper tiger had they...
You just said he was a paper tiger.
No, I said I wouldn't say if they had raised a lot of money in a strike fund. Their strike fund is 5 weeks. Well, they can pay you $500, $600 a week, and then you're out of money. People like to get paid. You can't hold out. I mean, these guys are not like
you're just
running
basing
backs.
it solely on
they're
the
not,
fact that
they're not like a running back who's going to hold out and get a big deal. There's no big deal if you hold out. And you've got to put food on the table. I'm just saying that Sean Fain, when you listen to him, he sounds like he's the president of the United States. No, president of something higher than the United States. He's not. And he won by a very slim amount. And I have a factory in Mexico, let me tell you something. It's fantastic.
So he suggests that they move all production to Mexico, where, of course, the wages are way less. And
he said $5 an hour.
You know it's bad when even your fellow CNBC host is like, really, you're going to just throw American workers under the bus like that? He's also just, as Jim Cramer classically is, completely wrong about their strike fund, which has, I think, $850 million in it, which even if they were going all out, all at one time, would be enough to sustain them for roughly 3 months. How are these automakers going to be doing? How much loss are they going to be taking in terms of their profit and their bottom line over 3 months' time? But since they're taking this targeted approach and upping the ante and upping the ante and upping the ante, I suspect that strike fund can last a whole lot longer than the 3 months that had been projected.
So let me just say, I have a little bit of a weird take on this. I'm curious your reaction to it.
Okay.
What Cramer is describing there is actually the problem with the nature of capitalism.
Correct.
Is that like this is exactly what they're thinking. Yeah. What the brass is thinking at the big three. They're like, okay, screw you. We'll just outsource all the jobs to Mexico because this is something we've seen it done time and time and time again in the U.S. economy. Now, here's the thing, though, and this is the interesting point, is that we know the NLRB, the recent NLRB, is pretty freaking militant, and they're pretty goddamn good at their jobs. They raised the overtime pay rule, and they did the rule where it's like, if there's union busting, we're just going to automatically recognize the union.
Yep.
So that's like a game changer where the NLRB is like, look, we're on the side of labor, more so than any previous NLRB. Yeah. So what I'm thinking is, that is what they're thinking, what the big three management is thinking. But I would like to see, if they do start to move in that direction, I would like to see the government intervene and the Biden administration say, if you outsource those jobs to Mexico, we're going to tariff the vehicles so that if they come in this country, it's gonna cost more to you to outsource them than if you were to keep the jobs here.
Yes.
And that's where you need a government that's on the side of labor in order to facilitate a concern for American jobs, because the problem for the entire neoliberal era is that the government only cared about management and the bosses and the CEOs and the owner class.
That's right.
You know what I'm saying?
Yeah, what he's describing is like basically what happened in NAFTA.
Right.
And what happened with permanent normal trading relations with China.
Right.
I mean, he is accurately describing the race to the bottom that has been the reality of radical free market capitalism under neoliberalism since, starting with Carter and definitely solidified in the Reagan and then Clinton era. That is exactly what has fucking happened. And there is no answer to that other than, over the long term, there is no answer to that other than the government making it a priority that Americans have good, well-paying jobs. Now, I actually think for the short term, it's a fucking stupid suggestion because, as his co-host points out, like, if they wanted to do that over the long term, yeah, they could do it. Over 3 months, a year, not a chance. You can't move all this production to Mexico like that. It's not something you can do at a drop of a hat. So that's not realistic from that perspective. And then the other piece is that the Biden administration has already made it so there are a lot of incentives for them to keep their EV production here in the U.S.
With the IRA, that's right.
So, I mean, that's the whole idea behind the Inflation Reduction Act is this is industrial policy designed to incentivize large corporations to keep those jobs here and build the cars of the future here in the U.S. Now, of course, there would be some number beyond which it no longer makes economic sense for them, but the subsidies that are in that bill are significant enough that, you know, we already see them moving to open new plants and keep that EV production here. Now, not to get too much in the weeds, there's actually a big rub between the UAW and the Biden administration over the way these incentives were designed, because while they incentivize high wages, they did not put in what they originally intended, which was a union requirement.
Mandate, yeah.
Because of fucking Joe Manchin.
Of course.
I mean, he was, and so they just abandoned that. And so now there's a rub, and there's, you know, an issue, like Tesla didn't want that, of course. And so there's a tension between the UAW and the Biden administration about the way they designed these incentives. But still, that industrial policy is important in terms of the leverage that the auto workers have in this situation, because the car makers do get a big boon from keeping that production here in the U.S.
And let me just say, so we already know what's on the table as we speak, which is the big three are saying roughly 20% pay increase. That's what they put on the table.
Yes.
And Sean Fain basically was like,
no,
piss off.
Yeah, I mean, it's kind of amazing. So I think it's always important to keep in mind that at the same time taxpayers were bailing out the big three, the workers also bailed out the big three.
Yeah, because they took a massive haircut.
Huge haircut in terms of pay, in terms of pensions. There was no more cost of living increase. They took on a two-tiered wage system. There were, I think, 21,000 layoffs. There were a huge haircut. And I'm sure the language at the time, the rhetoric was, oh, when we get back on our feet, of course, we'll make it up to you. And that never happened. So part of why the asks here are so bold and ambitious is because they've been getting screwed for over a decade now. And even if they were to take like the 20% pay, you might say, oh, that sounds great, 20%. Now, first of all, it's over 4 years, but that doesn't get them back even to where they would have been based on previous pay before they bailed out these automakers that are making record profits, automakers that collectively, issued $5 billion in stock buybacks last year, and now they're like crying poor when it comes to actually paying their workers. And one thing that you'll hear a lot is, oh, the labor costs, it'll make cars so expensive and they won't be able to compete, et cetera, et cetera. Labor costs are roughly 5% of the overall production costs of a car. So the idea that you can't pay your workers better, a living wage, and reflect the fact that these are the people that are generating all the profits for you is complete, utter garbage and nonsense. So when you inevitably hear that from corporate media, just know that is complete bullshit.
The CEO of Ford made $21 million in, I believe, 2022. 21 million.
Yeah.
And the CEO of GM made 29 million.
Yeah.
So, I mean, we'll see what happens, but certainly solidarity.
Oh, absolutely. Yeah, we'll watch how this one unfolds.